Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Vivek Iyer. Well, Vivek, it's an 800-point uptick as far as the Nifty is concerned. Going back on Friday, when who would have thought we would have seen such a big move on Monday itself? The broader markets also holding well in the green.
Well, it's been a spectacular rally, especially in the broader end of the market. So have a look at the mid-cap index and the small-cap index. The market breadth, the advanced decline there is very, very strong. Along with that, a whole host of results, not a lot of them as negative as the street was anticipating, that too, as aided the positive sentiment. But we have quite a lot lined up on the show. Let's start off with the top headlines. Stocks surge in trade after India and Pakistan agree to cease hostilities and the US announces a trade deal with China, signaling likely tariff relief. Realty, utilities and IT are the biggest gainers. Pharma lags, mid-caps surge.
Stocks of travel and hospitality companies like Indigo and Indian Hotels rally after India reopens 32 airports for civilian flights following a ceasefire with Pakistan.
Triveni Turbines surges on the back of a decent set of Q4 numbers. Margins improve, but revenue and net profit miss street expectations. The management tells CNBC-TV18 that order book gives them good visibility on the revenue front. Also reveals that the company has localized presence in Houston, Texas, to go ahead and cater to the US market.
Pumvankara Group surges after announcing JV for over a 24-acre land parcel in North Bengaluru with potential of over 3,300 crore rupees. Meanwhile, Abhishek Kapoor resigns as the group CEO and executive director. Brokerage MK maintains buy with a target price of 400 rupees versus their earlier target of 430.
Reliance Power surges post a Q4 FY25 numbers. The company reported an all-round improvement while finance costs dropped on a year-on-year basis. EBITDA and margin see a big uptick.
Well, 24,830, that's where the Nifty is at. It's a strong up move that we've seen in the Nifty. In fact, it is trading at the day's highest point. The broader end of the market is also holding up quite well. The advanced decline ratio, we have 2,500 or so stocks advancing for nearly 200 stocks that are declining, putting the advanced decline ratio as 10:1. It has been a fabulous day so far. All of the sectoral indices too are trading in the green, barring Nifty Pharma, of course. Nifty IT is up almost 6% today, led by OFSS, which is seeing an uptick of almost 8%. Persistent Systems also seeing an uptick of almost 7% in trade today. Nifty Metal as well as the Realty Index is also doing quite well. But there are lots of movers in the broader markets. And in our special segment, Midcap Movers, we now have Hormas to take us through the mid-caps that are moving around in trade. Well, Hormas, no Monday blues for the markets today.
Monday greens, if you want to call it that. And the US-China trade deal announcement has definitely resulted in a lot of a further boost to sentiments after, of course, the toning down of the escalations between India and Pakistan over the weekend as well. We start off with some of these reactions, and metals are the space that has been in the reckoning today. SAIL, Hindustan Copper, Vedanta, and take a look at all of these intraday spikes. And this is after the trade deal was announced between US and China. All of these names now surging between 7 to 8% in today's trading session. A similar effect being seen on IT names as well, particularly the mid-cap IT stocks. Oracle Financial, as you just mentioned, was one of them. Persistent Systems, Emphasis, Coforge, and these stocks were moving higher at the start of the session itself because there were already news of talks ongoing, and now they've received a further boost from these names. Of course, there are earnings reactions. We are reacting to some numbers that came in just a few minutes earlier from UPL and PVR Inox. But take a look at CE Infosystems is now up 9%. Triveni Turbines, we heard from the management earlier in the day, up 9% as well. But a negative earnings reaction coming in from KPR Mills and Navin Fluorine, both of them at the lows of the day. Stocks that are doing well on the back of strong volumes in today's trading session. And take a look at Cera Sanitary, where among the top gainers on the Nifty 500, Sirma SGS2 ahead of its results tomorrow is up 12%, and HFCL 2 trading higher 10% on very strong volumes. And lastly, another pocket that's doing well today are the railway PSUs. And of course, these are names like RVNL, IRFC, IRCON, all of them have corrected substantially from their peaks and now are seeing gains of anywhere between 4% to 10% in today's trading session. Back to you guys.
Well, thank you so much for that, Hormaz. Quite a comprehensive list as always. But, it's a good time to now welcome in Sachidanand Uttekar, VP Research Trade Bulls, for a technical check on the market. Good afternoon to you, Sachidanand. This is Vamakshi joining in. Well, the markets have had a fabulous run so far, at least in the trading session today. We are up, beyond the 24,800 mark, which was the crucial resistance. But where are the markets headed now? What is your take on the Nifty as well as the Nifty Bank?
Good afternoon, Ramakshi. Clearly, I think the momentum is very strong, and the way the Nifty has taken out that level of 24,500. The force is, in fact, intending that, indicating that this particular momentum may stretch towards 25,180 during this particular week itself. So we are looking at a vertical, rally. I think we've already crossed that particular mark with 300 points gain, but we expect that this particular momentum may continue. We have seen fresh, writing data indicating that the base at 24,000 has now shifted towards 24,500, 24,600. So unless we don't see a decline or closure below this particular level, we expect that the current momentum in Nifty, could push the index towards 25,180 eventually. When you look at Nifty Bank, we have been, indicating that 55,000 remains as a very strong base, and the way the Nifty has been reacting, Nifty Bank has been reacting towards that base. The expectation is that even here we can expect a strong breakout coming, which may push this particular index towards 57,000 mark. So I think the reward to risk opportunity right now is better in Nifty Bank, and that's why we are recommending building fresh long positions here. One can keep a stop loss at 55,080 on a closing basis and expect this particular momentum to continue towards 56,800. When we look at Nifty, the reward to risk may not be that healthy, but in case if we see a pullback somewhere close to 24,740, 760, I think that will be an ideal level wherein some long positions can be deployed for an eventual target towards 25,180.
Sachidanand, your individual calls in this market?
Good afternoon, Vic. We are liking ICICI Bank. If you look at the overall structure, it is indicating a bullish flag formation with a price target somewhere placed around 1485. So the reward to risk is still better here. One can keep a stop loss at 1420 on a closing basis and look for fresh additions in this particular counter. The other stock which has displayed a very strong bullish impulse characteristics is Escorts. Now, disclosure would be that we have already recommended this trade setup to our clients. If you look at the overall sequence, it has managed to engulf 6 declining days in today's trading session itself, and the way the data is indicating, we may see a further thrust towards 3560 levels. So that's why we are recommending building long positions here. One can keep a stop loss at 3320 on a closing basis and look for opportunities for a price target of 3560.
Thank you so much, Sachidanand, for joining us, giving us your view on the markets as well as your individual stock picks. Well, we'll now slip into a short break. The management of UPL joins us next to discuss Q4 numbers and the way forward. Welcome back to Midcap Radar. Well, as promised, we will now be joined by the management of UPL. Remember, the company reported a good set of Q4 numbers, margins came in healthy, and EBITDA zoomed higher by 67%. We are now joined by Jay Shroff, the chairman and group CEO at UPL, along with Mike Frank, CEO of UPL Corporation. Thank you so much, gentlemen, for joining us. First up, Mr. Shroff, congratulations on a very strong set of numbers as far as FY25 is concerned. It was a year in which you actually struggled, given the fact that, in fact, the global agrochem industry struggled, given the fact that there was very high inventory. Despite that, there's been significant deleveraging. However, going forward into FY26, the Fleet is slightly disappointed by the 4 to 8% revenue growth guidance that you've given, along with the mid-teen EBITDA growth guidance that you've given. What has led to a slightly if you may call it, a slightly conservative guidance for FY26?
Thank you very much. Yeah, there is, while there is a lot of excitement in the industry about the recovery from the very, very difficult year we had, 23-24, everybody is very cautious on the volatility in the market with the commodity prices, with the tariff situation, and these sort of volatile markets require very, very thoughtful business strategies. We also want to continue to deleverage. We want to make sure that we control the cash flows. We need to continue the discipline in the industry. UPL is a large player, and a lot of industry follows our cue. The focus is around deleveraging the balance sheet. Focus is on quality of business, and with the volatility in currencies, markets, commodity prices, we just need to be very, very cautious, optimistically cautious on the outlook for next year.
Sure. Thank you so much, Mr. Shroff. But, I'd like to ask Mr. Frank what his take is on the kind of growth that you're penciling in for different geographies you serve, the LATAM market, the North American market, with the kind of uncertainties that we have around global trade and the geopolitical tensions, which as of now are abating. What is the kind of growth that you see in different geographies?
Yeah, so good to be with you. And as you saw in our Q4 and full year results, we finished the year very strong. Overall, we grew volumes significantly in our FY25, and that growth was really centered primarily last year in Europe and North America, which grew really strongly. For the most part, the rest of the world and Latin America were more flattish from an overall revenue standpoint. That being said, if you look at our results relative to the industry, we have a lot of momentum. We gained market share. Our volume growth outpaced the industry quite significantly. So we really see us carrying into FY26 with a lot of momentum. And we do expect growth in every one of our regions over the next year. Last year was a big recovery, both in Europe and North America, so we likely won't see as big a step change in our growth in those regions. But, we've really, I think we have a lot of new products. We're going to be launching over $130 million of new products in FY26. And so there's just a lot of momentum carrying us into next year, which we think will help us continue to grow the business as we've guided to.
Mr. Shroff, along with the growth in business, one thing that you've mentioned as far as FY26 is concerned is that you're going to be focused on margins and maybe at the expense of volumes. What has led to that particular strategy? Number two, there has been significant reduction as far as debt is concerned. FY26, at the end of FY26, where do you target the debt picture to be? What is the operational cash flows? How do you expect that to come about at the end of FY26? And lastly, along this particular line, for debt reduction, when do we see the seeds business IPO come about?
Thank you very much. Yes, the focus is to deleverage the balance sheet. And, we've reduced, we've had about $1 billion plus of debt reduction. I think the following year also, the team is focused completely on reducing debt, deleveraging the balance sheet further. We are launching a lot of innovative, new, differentiated products in our pipeline across the world, and those will improve overall margins. We expect that to continue to grow. Our NPP business also is growing very nicely, and we have some very unique new product launches which we expect to grow a lot and add to the bottom line. As far as Advanta is concerned, we are in, Advanta is, we've had a new investment from AlphaWave. We have fantastic new shareholders with KKR and AlphaWave. We expect to continuing to review the IPO market and then look at it either towards the end of this year or next year.
In terms of, Mr. Shroff, in terms of the channel inventory, What is the current situation? Last couple of years, we understand it's been really tough. Has that reduced? And also, if you could give us a comment, if you've in the last half hour, tuned into CNBC, you would have realized that, the US as well as China have reached a broad understanding as far as tariffs are concerned. Given that you are an integral part of the global supply chain as far as agrochemicals are concerned, how does this impact you?
Yeah, I'll answer the last part first. We see a very good tailwinds for our U.S. business. I think in the U.S., UPL is one of the largest supplier of crop protection chemicals, and we are seeing a lot of interest in and tailwinds for that business. I mean, it's good that there is stability in the trade wars, and some kind of visibility there would give us a good understanding of how to position our pricing in the U.S. market. As far as UPL is concerned, we feel very comfortable that our cost of production is good, and we can be very competitive and continue to gain market share around the world. And we continue to do that to really support our distribution base in not only in the US but all over the world.
Well, and I'd just like to ask Mr. Frank about the kind of pricing that is now taking place. The expectation was that there would be some price recovery in some of the key chemicals that would be sold by UPL. So, I mean, what is your outlook on pricing? Where has it recovered? Is it largely the same?
Yeah, so if you look at our fourth quarter results, you'll see that our biggest tailwind was from volume. So we continue to grow volume and take market share. Price was also, though, a tailwind, and so we did see some improvement on pricing in our fourth quarter, which we think will carry into FY26. And so we really do believe that the current environment for post-patent crop protection products is pretty much bottomed out, and that was the case through the course of really the last 2 or 3 quarters last year. And so now, we do see some recovery in a few active ingredients, but more importantly, it's really our new products that really are setting a new standard in terms of the value that they create for growers. We call them our differentiated and sustainable products, and those products are really priced to the value, and that's where we continue to see opportunities to see some price increase going into FY26.
Okay, Mr. Stroff, last question from our end. I'll try and squeeze in as many as I can. Number one, China recently imposed levies on imports of the insecticide cypermethrin at 166% for UPL. What will be the impact over there? FY26, given the fact that you're focusing on margins, what can be the net price realization increase that we can see? And lastly, are you looking to increase stake as far as UPL is concerned?
So I think cypermethrin is a product which we sell around the world. China is not a very big market for us, so no material impact on that. As far as the pricing of products, we continue to focus on bringing business efficiencies and reducing our cost of production. That's an ongoing process, and I think with the challenges which the industry faced, I think there has been very good work by our team. As far as the shareholding increase, we were able to get some additional shares as a family during the rights issue. So we've been able to increase our stake, but that is a continuous endeavor to increase our stake in the company as and when we feel that we have adequate cash flows.
Well, thank you so much for that, gentlemen. That was the management of UPL speaking to us, talking about the outlook going forward into the year. So thank you so much. We hope to connect with you soon. But viewers, as we slip into a break, here's some good news for you. India's business news leader is now only a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're watching Midcap Radar on CNBC-TV18. Pull up the chart for Bajaj Electrical. The company reported its numbers just a short while ago. That stock has surged by higher by almost 16%. They've announced fundraising of around 500 crores. Look at the up move that has come in after the company's results were announced, up as of now 16%. But apart from that, pull up the chart for MAN Industries as well. Keep in mind that the company also reported its numbers. The margins have expanded substantially to 9.95%. The revenues are also seeing a good uptick. For MAN Industries, the stock is surging higher, up almost 20%. PVR Inox is another name that just disclosed its numbers. The margins have improved. The net loss has narrowed for this counter as well. The stock seeing an uptick of almost 3.8%. But apart from that, lots of stocks reacted to their numbers today as well. When we look at Birla Corp, that stock is surging higher by almost 20% since the get-go. Reliance Power as well, up and flying away almost 11% higher. And on the downside, though, we do have KPR Milk. Remember, the stock was up in the trading session yesterday, rather on Friday, on the back of the FTA with India as well as UK. But today, on the back of its numbers, the stock is taking a knock. On the flip side, when you look at some travel-related stocks, Thomas Cook is up almost 14%. Interglobe Aviation as well, seeing an uptick of almost 7%. But that's all we have on Midcap Radar. Closing bell when we return.